What qualifies for bonus depreciation on rental property? Let's explore that question today. In this video, we will have a quick introduction on what bonus depreciation is and what property qualify for bonus depreciation. We also talk about personal property and land improvements, so stay tuned for that. If you are about to sell your property next month or next week and wondering what should you do, and you feel anxious and concerned, if you should do a 1031 exchange, there are other strategies around that to help mitigate or defer capital gain tax for the tax year. So you are in the right place. We have an upcoming course on 1031 exchange and capital gain tax specifically for your situation where you are in a crunch of time and want to consider if a 1031 exchange is the right answer for you. The course will focus on hands-on skills to allow you to calculate your own capital gains potential and also to calculate the number that go with a 1031 exchange. So we want to focus the most important item for you to be considered at that short time frame, but also the most impactful. If you would be qualified for a homeowner exclusion, and how much would that be? And then what a 1031 exchange strategy is, and how can you use this to save thousands of dollars in taxes. So I'm going to put a link to sign up for the early bird special for the course in the description section. So feel free to check that out and also indicate your interest if you want to know about 1031 exchange, bonus depreciation, section 179 depreciation, or cost separation are the topics. So let me know. I'm Mia, your Enroll agent, and I have more than 15 years experience in helping especially real estate investor and homeowner who save thousands in taxes. So I definitely in your shoes right now, and I feel what you're going through. That's why I'm putting all this information together. So we all know that we have to take depreciation when you have a rental property. No matter if you want to take it or not, that's not the question. You have to take it either now or you don't take it now. Then when you sell, then you're going to have to pay tax on it anyway. So then you're going to try to recoup it that time. But wouldn't that be more beneficial to try to do it now, right? So you have to take depreciation, and bonus depreciation allows you to take extra depreciation to help offset this current year and help you have a better plan for your tax strategy for this year and also the upcoming years. If you know what you're doing, that's why you are here listening to this video, and I'm hoping to provide you with the answer. So we all hear about depreciation, bonus depreciation, and cost separation. So how do we use all these strategies together and do a back up to that? Like, what is cost separation? So cost separation is a study that usually you can do it yourself, or you can hire a CPA, a special tax specialist, to do it for you. And basically, it's allow you to section out the part of the property so you cannot depreciate land. So that's a no. And then the building structure, the structure itself that gonna be depreciated over a straight line for 27 and a half years, so you can't do anything about that. But other items such as roofing, window, curtain, treatment system, so you can assign them to a specific category and accelerate the depreciation, which means you can take more depreciation up front. So that's why people do cost separation. And how do they combine everything together, right? So with the Tax Cuts and Jobs Act of 2017 kind of changed the landscape a lot for bonus depreciation. So that was the time that they allow bonus depreciation to be 100%. So usually they'll qualify improvement property, usually before the Tax Cuts and Jobs Act, they were supposed to be depreciation over a 39 year, but then they allow it to depreciate. With the tax law, they allow it to be depreciated for 15 years instead. So because of that 15 year, it falls under the definition that qualify for bonus depreciation. So you see, you want to do a cost separation that allow you to not just take accelerate depreciation like the regular accelerate depreciation, but also allow you to do bonus depreciation. So allow you to, for 2023, you can take up to 80% of depreciation value. So you can do that. And then every year from then, it's going to keep decreasing 20% until it's run out. So we talk about depreciation is a must, and then we talk about bonus depreciation and how it's linked to a cost separation. So that's a lot of information right there. That's why I'm creating this video as a series. So we had one before this one. So this is the second in a series. So every week there's going to be a new one coming out. So do subscribe so you're going to be alert to know when the next one come out. And do listen to the whole series so you get the full tax strategy and how can you combine different tax strategy together to optimize your advantage investing in real estate. Now let's talk about qualified property that can be used for bonus depreciation. So this qualified property has a useful life of 20 years or less. So we talk about land is not deductible at all. So land is out of the question as always. And then the structure of the building, like the actual building itself, is a structure, so you cannot do bonus depreciation on that. You have to do it over a straight line. So residential is 27 and a half, commercial building is 39 years straight line. So, and then the rest that would be purchased for business use and the rental, then you can apply bonus depreciation for that. So both new and newly acquired property is eligible as long as the owner has not previously used it personally before they place it in the rental property. So here are some examples of personal property that qualify for bonus depreciation, such as appliances, such as refrigerator, washer, dryer, and furniture such as couches, beds, and tables. So especially if you do a short-term rental, these are very so much applied to you. And then carpeting and flooring, lighting fixture, if you want to update it, make it more pretty, modernize it, HVAC system, then window treatment such as blinds and curtain, and then smart home tech and security. So my smart home tech, a lot of the items that to install the security system or some kind of camera system to monitor the property and to provide security. Also related to that is the internal security system also, right? So I'm just going to give a rundown list, and then there's going to be more to it as long as qualify for the definition that we talked about earlier, then you can basically use it, right? And then share amenities such as storage and gym equipment, sound system, the TV, and other small items that used to furnish the rental. You can also depreciate other regular items that you use to manage the rental. The rental operation is also qualified for bonus depreciation. Such items as hardware, such as computer, printer, and networking equipment, and also vehicles that you use for business purposes, production and equipment used for filming, staging, and marketing the property, office furniture and fixture, and then also software that you purchased that was non-licensed. So that might seem like a lot, but if you have any question, you can always put in the comment section, give a like, a thumbs up for the video if you like it, and then put in the comment. Also, we have a new Facebook group called Tax Secrets for Real Estate Investor. It's pretty new, brand new, so do come check it out and support, join the group, post your question, engage, be a mentor, be a mentee, engage with other real estate investors, and help the community out. So next up, we talked about personal property and how it's qualify for bonus depreciation. Now we're going to talk about land improvements and how it can be qualified for bonus depreciation. So land improvement refers to enhancement or addition made to the land associated with the property that enhance the functionality, the beauty of it, or the value. So these improvements typically have a useful life and can be depreciated over time for tax purposes. So land improvement can include items such as irrigation system, fences, driveway, outdoor lighting, also security system, and other enhancements that contribute to overall appeal and functionality of the property. So other land improvements can qualify for bonus depreciation if they meet these criteria. So it have a useful life of 15 years or less. So this means that land is not qualified, right? And then we also talk about structure is not qualified. So now I'm just going to give you a rundown list of what are some of the land improvement that can qualify. So it could be the landscaping, irrigation system, the fence, the walls, driveways and parking lots, sidewalks and pathways, retaining walls, outdoor lighting, swimming pool and spa if they are not permanent fixture, because if they are permanent, they consider part of the structure, right? And then remember, the building, the structure itself is straight line. And also security system and sprinkler system. So you can see that a lot of time people would either they do bonus depreciation together with a cost separation, or you could do just the bonus depreciation itself for item that you can list out and depreciate. You don't have to do a cost sec, but you could do it as combination. So you can do any of these strategies separately, or you could do it together with a 1031 exchange. And usually how you do a 1031 exchange is one of the possible way is you could 1031 exchange into a property, and then you would do a cost separation, and then also do bonus depreciation to basically you already defer the capital gains for the previous property, and now you get to deduct more and more now with the depreciation strategy, the bonus depreciation with the cost set. The advantage of the 1031 exchange is if you don't plan to sell or you don't need to sell, it's basically you keep defer. Every time you get a new property, you keep 1031 exchange it until, God forbid, you pass away, and then you give it to your heir and they inherit at a step-up basis. So basically, the depreciation gets wiped out, even though you take all the benefit and you even take extra benefit with the extra depreciation, right? So it's really worked well, especially with 1031 exchange, if you plan to do it consistently like that. And basically to the point that you passed the property to your heir, right? Because once you do a 1031 exchange, you want to sell it, then all of the depreciation, recapture, all that stuff, then we have to take into account for all that stuff. So it's getting complicated, and it could give you a big tax bill. So usually with 1031 exchange, plan to do it. If you want to do 1031 exchange, do consider if you can keep exchange it and change it, and then the way that you get the cash out could be like a HELOC. So if you need more guidance and you feel like you want to talk to one of the professional on my team, so in the comment section, do fill out the form so we can contact you and we can have a quick consultation to see what is the best strategy that we can help you with. So if you like the video, like, share, subscribe, and let me know what you want to hear next, and then do subscribe so the next series gonna come out. The next video for the series gonna come out next week. So stay tuned for that. Take care. Mahalo. Bye.